Yes, legends, welcome back to the channel as always. Guys, as you can see in the title of this video, I'm going to do a full comprehensive review of the Bybit leverage exchange, guys, for cryptocurrency. I've actually been using this exchange, guys, for around 3 years. I've actually been trading cryptocurrency for 5 years using my own money. So I actually know this exchange very, very well. And I know a lot of hidden tips and tricks. You know, there's a lot of tutorial videos of Bybit out there which are really not doing it justice, giving you the real inside scoop of how to use the exchange, guys. I'm going to go through every single tab. I'm going to talk to you about derivatives. I'm going to talk to you about how to use the exchange, a spot exchange. We'll go through, obviously, stop losses, conditional orders, trailing stops, post-only, reduce-only orders. I'm going to show you how to become a market maker within this exchange as well. So you can actually get paid to trade, which a lot of people don't know about. And go through the general gist, guys. Go through every single tab here at the top. Go through perpetual swaps. Go through the futures. Basically, guys, this is a full comprehensive review. I'm going to give you my hidden my tricks as well. I've been using this exchange for a long time. I know it very well. And also, Legend Days, we'll do a quick competition as well, guys. In the comments below, guys, I'm going to give away $250 and an MDX premium account for free. All you got to do, guys, is like this video and comment below. What's your favorite feature in Bybit, and what do you think they could add into the exchange as well? Bybit will most likely look at this video, so anything below, guys, might actually get implemented, and the best comment below, guys, will win $250 and an MDX premium account. Without further ado, guys, let's go from the top. I'm going to go through everything in this exchange right now. So, legends, let's get cracking. I'm going to go from top to tail, go through all the tabs. Now, obviously, guys, the first thing we did with these exchanges is actually signing up. Now, Bybit is actually quite an interesting exchange because you don't need to do any KYC to actually create an account. Now, this is great for crypto traders, you know, not your keys, not your crypto, whatever. But the cryptocurrency you put into Bybit is the only crypto you can actually lose. So, no KYC is definitely a plus for a lot of people. And guys, also, Bybit do have massive bonuses when you sign up to get an account. I actually know Bybit very well, like personally talking to the team, and they actually put out links. I don't know what the bonus is right now, guys, but they actually put out links for when you guys sign up. You can actually participate in this. You can actually get thousands and thousands of dollars free in the exchange to start trading with, just to basically give you an idea whether you like the exchange or not, to give you some tradable funds. And Bybit have actually given me a link, guys. The link is actually below. Use that link to sign up, and you will get some type of bonus. I'm not exactly sure what the amount is. It fluctuates from time to time. But at the moment, you can literally get thousands of dollars for free, guys, in the exchange to get you started, so you can get, to know the exchange. And if you like it, you'll carry on. And, you can actually get positive P&L from this money. This is no joke. This is free money you can trade with and actually make gains from. So that's basically the sign-up process. Now what we want to do, guys, is go through some more tabs. Right, as you can see, guys, the first tab is buy crypto. Now, very, very simple. I won't go through this massively. You can basically buy crypto with your debit card. Just click Express, and the money you buy with your debit card will actually go into your assets, into your spot account. I'll go into spot account and derivatives account in a second, but it'll go into your spot account, and you can actually use those funds to trade a whole load of different assets, guys. Bybit have basically added a ton of pairs in terms of altcoins. You can trade Bitcoin, you can trade altcoins, guys. I won't even bother going through the list. Every single altcoin you can ever dream of, you can actually trade in Bybit. And the reason you would want to trade in Bybit, for me personally, is that there's massive volume going through this exchange and huge open interest, which means that even if you're trading large size, your orders are going to get filled with low slippage. Now, this is very, very important. That's one of the main things you want to be using exchanges like Bybit for, is the fast matching engines, the low slippage, and the big order books. Okay, so you can trade anything you want, guys. There's USDT perpetual swaps, inverse perpetuals, and inverse futures. I will tell you exactly what all those things are in a second, guys. I'm just going to whiz through these easy ones and get into the juicy stuff in a second. So guys, trade. Now, trading, this isn't, okay, there's trade and there's derivatives. These are actually two different things. And most of you guys who are watching this video are probably going to want to trade derivatives and not trade spot. And the reason for that is derivatives actually gives you access to up to 100x leverage. Now, you've got to use this carefully, guys. You've got to be an experienced trader to use this, but it does offer up some interesting tools and some interesting ways you can increase your gains. Obviously, you increase your losses, but you can also use leverage to relieve margin, which I'll go into in a second. Now, trade, I'll click on it now to quickly show you, but it's quite self-explanatory, guys. You trade spot, and spot so if you buy crypto with your card, it'll go into your spot wallet, okay? So if you click spot wallet, it'll come up, it'll show all your balances. And as you can see, guys, you get this screen. It says spot wallet derivatives account, okay? So spot account, derivatives account. If you want to actually basically add funds to your Bybit account, guys, just literally go on this page and then click deposit, and you'll actually be able to deposit Bitcoin into the exchange if you're not buying with your card. And if you deposit into your spot account, guys, you'll be able to use this trading tool, which will be your spot buy and sell. Spot stands for, basically buying it off the books without leverage. It's not a derivative, it's not a product, it's actually buying the actual Bitcoin from the books. When you use derivatives, you're actually using contracts, but we'll get into that in a second. So if you fill up your spot account, guys, just click deposit, go on this page, very simple, deposit Bitcoin. And then the main thing, guys, a lot of you guys want to talk about is derivatives. Now, this is what my derivatives screen looks like, guys, but actually this is completely customizable. You can come and customize this how you want. I have a trade open right now for educational purposes. I'm just going to use this trade to show you how it works in terms of getting in your stop losses, your trailing stops. We're going to go from conditional orders, and also, guys, we're going to talk about post only and reduce only, which you can actually see over here. It says post only. We're going to talk about that in a second, but there's a few different ways you can actually trade derivatives on Bybit. You can use USDT perpetual swaps, you can use inverse perpetual swaps, and inverse futures. Now, just to quickly rattle over this, guys, it's really, really simple. All of the altcoin pairs are going to be a USDT perpetual swap. So you fill up your wallet with US dollars, USDT. You trade the volatility of Bitcoin or the altcoin, and you'll actually make more US dollars in that trade. Okay, so it's basically a USD perpetual swap. Perpetual means that it'll be open forever. When you actually buy the contracts, there will not be an expiry date. And that means that you can leave an open or a short trade open for as long as you want. You just pay a funding fee, and the funding fee will come up here, and it will show you actually right now. You can actually get rewarded for being in a long position. Okay, so that's USD perpetual swaps. Then you got inverse perpetual swaps, which means that you will fill up your wallet with Bitcoin. When you trade Bitcoin on the perpetual exchange, the inverse perpetual exchange, you will actually make more Bitcoin. So if you want to make more dollars, use these. And this is where all the altcoins are basically at in terms of the trading pairs. And then if you want to make more Bitcoin and you're trading Bitcoin as itself, use an inverse perpetual swap. And then, guys, an inverse future is when you have it's very similar to an inverse perpetual swap in terms of you need to have Bitcoin and Ethereum in the exchange. But an inverse future isn't a perpetual, so actually these are used for more medium to long-term trades because you don't pay any funding rates on an inverse future. So long-term trades use inverse futures. You won't pay funding, but there will be an expiry date. So in the future, all positions will be closed from the contracts bought. Okay, so generally speaking, guys, a lot of you guys, when you trade altcoins, will use USDT perpetual swaps. When you're trading Bitcoin and Ethereum and EOS and these other altcoins, I would say that it's better to trade on an inverse perpetual swap because you actually make more Bitcoin and Ethereum as you go. And for now, I'll actually come on this. I'll actually show you this now, guys, right in real time. I have a few positions open, and what we're going to do now, guys, I'm going to actually show you how to place trades within Bybit. Okay, really, really simply, place trades within Bybit, and this is the inverse. We'll just stick with inverse perpetuals for now, and I'll show you how USDT perpetuals work as well. Okay, so as you can see, guys, at the top here, you can actually see that this is the leverage. Okay, let's dive into leverage right now, guys. I'll start with leverage. I want to make this really this is an important time to talk about leverage. Okay, guys, so when you're trading on Bybit, you can actually get access up to 100x leverage. Okay. There is a time and a place to use 100x leverage, but I would not recommend it. I'd recommend using lower leverages, guys. Crypto in general is very volatile, so you can pull out gains without using high leverages. The difference between cross and isolated leverage is that cross means that you use your whole entire account, guys, as the collateral to create your liquidation price. What I would say is if you're using a stop loss, there could be a time and a place to use cross, but generally speaking, guys, I would always opt in to use isolated. This is a tip and trick from me. Use isolated. So the money you put into a trade is the only money you can lose, and you can't go losing your whole account. Goes against a lot of risk management strategies. So I won't go into that now. But let's just leave this on for argument's sake, like four times, okay, on isolated. So guys, I've actually just moved over to a USDT perpetual swap for Bitcoin because on the other side, I've actually got a trade open. But I've set up here, guys, and what we're gonna do is we're gonna do a limit order. And I'm going to show you on Forex leverage how this looks. Okay, so A limit order, basically, guys, to make it very simple, is that you're not buying the market price. So the market price is you're buying the price of Bitcoin right now as it stands, the price of this second, okay? And you can see here, guys, the market price is basically 38K. But if you don't want to buy 38K and you want to basically buy the price you want to buy Bitcoin at in the future, what you would do, guys, is use a limit order. And what you can actually do, guys, you can actually choose the price you want to buy Bitcoin at. So say you want to basically buy, Bitcoin when it's at $30,000. You think Bitcoin's going to go to 30K, and you want to buy one Bitcoin when it goes to $30,000. When you actually click open long, guys, this position will actually be set in the books. And if Bitcoin does go to $30,000, you'll buy one Bitcoin. But you will actually buy it on 4x leverage, so you won't spend $30,000. You actually spend less than that. If the leverage was 10x, guys, to make it nice and simple, put your leverage as a 10x. When Bitcoin actually goes down to $30,000, you buy one Bitcoin. You'll actually only need to have $3,000 in the account to buy that one Bitcoin, and they will give you a liquidation price. So let's just actually do a trade right now. Let me just put into, let's just say $36,000, okay? I want to buy Bitcoin at $36,000 here, and this uses as an example. I'll click buy long, guys. You'll see this tab now. So I'm on 10x leverage, guys. So I'm buying $30 worth of Bitcoin, around 0.001 Bitcoin. And because I'm on 10x leverage, it means that I only need to actually use $3.6 to get the position. But guys, if the price of Bitcoin goes below or to $32,580, that position I put on would actually be liquidated. So what I'm doing is, if you're increasing your leverage, you're increasing your risk. And if the price of Bitcoin does go to $32,000 against my trade, I'll actually get liquidated. Those contracts will go into the books, and actually someone on the other side will buy them. Sometimes even go to the exchange for them to sell. Okay, so that's what happens there. If you click confirm, you'll see a position will come up on the screen. Okay, now, so guys, what you can see here actually is we do have an open order now, okay? So we have an open order. Actually, I had an open order earlier, but I just took it off. But let's have a look at this, guys. So you can see here that this is now basically an order we have in the books, right? If Bitcoin does come down to here, it'll actually get filled. And what you can do, guys, to add a stop loss, let's start with the stop loss side, is you can add a stop loss when the position is in the books, and you can also add it before you even do the trade as well. So actually, you can actually buy a limit order here. If you click buy with a stop loss, you can actually add your stop loss in before the order goes in. So before you click open long, your stop loss order will be set. But the main way most people do it, guys, for a stop loss is you would click this add button here. It says TP/SL. Click on that, guys. Now, this is how you set a stop loss, guys. Okay, very, very simple. You can also do a take profit. I will actually show you a really interesting way to be able to take profit in a more efficient manner, because a take profit here is actually going down as a market order, and a stop loss is a market order as well. I will show you a way, guys, to be able to take profit and stop yourself out using limit orders on post only, so you actually get rewarded for this. I'll show you that in a second, guys. But very simply, guys, with stop losses, let's just say when the price of Bitcoin goes up 10%, you want to take profit. You can literally just click 10%, 25%, 50%, all the way up there. You can even choose your specific price as well. So say you want to buy 30K Bitcoin, and then when it goes to 50,000, you want to take profit. You just put 50K in there. And then your stop loss, guys, will be how low can how low can the price go before you get liquidated. We already know that the liquidation price is 32,000. So let's just say that you don't want to lose the whole entire amount. 33K is where you want to get stopped out. So as you can see here, guys, now we have TP 50K, and we have a stop loss at 33,000. You can't see the lines on the screen, guys, because this order hasn't been filled yet. If you just delete that order by clicking the X, let's just show you how to do a market, guys, really simply. So market order, guys, I want to buy Bitcoin at this price right now. You will pay actually a taker fee for this. Market orders, you pay fees. Limit orders, you don't pay fees if you use post only. I will tell you how to use this in a second. So market orders, guys, I'll quickly show you how it works on this side. So let's just say, for instance, now, guys, I want to buy long $30 worth right now. So you literally click that button, guys. It will come up here. I want to buy. I now have bought some Bitcoin, guys. It will be in the books. Now, you can actually set it, a market order straight away with your stop losses in. When the position is actually open, guys, you can click on TPSL here. I'll make it really simple, guys. 10% on each side. You click confirm, and you will see basically two lines on this screen. It will show you where your stop loss is, which is just beneath us, and where your take profit is, guys. You can actually slide these on the screen as well to change your stop loss and your take profit. You can put your stop loss, beneath this wick here. You can move this higher here. In terms of trading, guys, I wouldn't recommend going into a trade with the idea that you want to move your stop loss or your, you know, your take profit. But that's for you. That's another video. But I would say that you can move your stop loss and your take profit, and you can actually get rid of them here as well by deleting them like that. Now, that's one way of adding an area of the market to take profit and an area of market to take to stop any more losses. Stop loss and a take profit. Now, so what do you do if the market is trending and you want the stop loss, which we put on a second ago, to follow the price action, potentially in an uptrending market where you're not sure where the stop's going to be, or you're going to sleep and you want to make sure that if the market does crash overnight, that you get stopped out at a higher price from where your entry, your stop loss is right now. Trading stops are actually very, very simple as well. It actually says trailing stop right here at the bottom. And what you do is, guys, you click add. Now, this is really, really simple, guys, to actually place this. And it will be slightly different if you're using a limit order before, because you have to put an activation price as well. But price retracement, guys, just type in 500, okay? That's basically means $500. So if the market begins to rally up and up and up and up and up, literally your stop loss will always be $500 beneath the price rising of Bitcoin. So you literally just click confirm, guys. It will pop up. So now because I'm in a long position, guys, if Bitcoin does begin to rally, this the actual stop loss will follow Bitcoin at $500 beneath the price it rises. So if I literally wake up tomorrow and the price of Bitcoin is at $40,500, this stop loss would have followed it all the way up, and the stop loss will be at 40,000 if the price is at 40,500. So it's really, really simple. On the inverse perpetual side, guys, you'll also have something which says activation price. This will be in a scenario where you have a limit order. The activation price is how high do you want the order you have put on to go into profit before it starts the trailing stop, because you don't want to have it straight away in a lot of cases, because you might get stopped out on a wick down. So you would rather wait till the market actually rallies up, you actually get into some P&L, some profit, and then the stop loss starts to follow the price as it rises. So you can use activation price, will be the price you want it to start at. And you can see it very, very self-explanatory. You can actually change it as well. The price retracement, you can just choose. You can even do $1,000. So, if Bitcoin drops $1,000 down, it will just follow the price as it rises, guys, in this long position. So that is a very, very simple way of adding a trailing stop. And a lot of guys that ask what this question is, they say, what is ADL? Guys, I'll make it really simple for you. This is basically in the queue on Bybit when your order will actually get executed. Let me just make it very simple, guys. The higher this is, the worse. And the more leverage you're using, the further back in the queue you're going to be, which means that you will incur slippage if you're on high leverage, okay? So I would always recommend using lower leverages, guys, obviously. Okay, so that is basically looking at take profit, guys, stop losses. You can do it here. And then you have I have a trailing stop open right now. And then you guys, you have conditional orders as well. So very simply put, guys, a conditional order is an order you want to place with conditions. It's very, very simple. And you can actually use this to, and I'll actually give you an example. So say Bitcoin, when Bitcoin gets to $40,000, you want to execute a long in the books at 39,500, because you think if it goes to 40K, it might dip a little bit and you might get filled in a position. So the trigger price, guys, is at 40K, and that's when you want your position to go in. In this example, I'm saying a limit, right? You want to basically limit in at 39,500. And then the quantity will just be basically, let's say you want 1 Bitcoin, so you just type in 1 Bitcoin. So basically, when the price of Bitcoin goes to $40,000, when it gets to that price level, you will then enter a limit order into the books for buying Bitcoin, 1 Bitcoin at $39,500. But that position will not be in the books yet. But if we do go to 40K, that position will then show up. You can also do this with market orders, okay? So this could be used for, say, a breakout trade, for instance, because if you're waiting for some sort of symmetrical formation, or you have an ascending triangle, whatever, and you want to buy Bitcoin as soon as it gets above a certain price level where the breakout point is, what you can do, guys, you can just say that, let's just say, for instance, this wick here, you want to buy 38,700, okay? Just for argument's sake, 38,700, because this wick here is the top of an ascending formation, okay? You can actually have it so if you use a market order, if the price goes here, you will instantly basically buy the price. You will buy the market if the price goes to that level, okay? You can see if the price goes to this green line, guys, which you can move as well. You can move the trigger price. If the price of Bitcoin goes to that level, this trigger, you will then instantly buy $30 worth of Bitcoin in this example. It'll be slightly different on inverse perpetual swaps, guys, because inverse perpetual swaps, you'll be putting the amount of dollars of Bitcoin you want to buy in instead of the amount of Bitcoin you want to buy in, because obviously you're trading Bitcoin as a perpetual, you're not using US dollars in the exchange as your collateral. So let's clean all this up, guys. You can actually just click the X's, get rid of everything on the screen. When you actually click the X's, you actually execute a market order. Just get it out. When you use a limit, you can actually use that to take profit. But so now that's all cleaned up, guys, I want to talk about how you can become a market maker within Bybit and actually get paid to trade on the platform. Most people don't know how to do this or even understand how it works. And this will allow you to basically really limit down your fees and potentially, if you limit in and out, get rewarded a lot of money actually in the long term for actually creating market liquidity, creating the order books. And what I actually want to do with this right now, guys, actually play you a clip from another video I did previously. It was actually about a year ago now, but I'm going to play a clip, guys, just explaining post only and reduce only in a quick, sharp way now. A few things to mention, guys. You can have a post only order, limit order, or you can have a reduce only order. Now, these are actually very, very important to know what these do. Now, just to give you a quick example, post only basically means that if you're going to have a trade, which you're going to have a limit order, so let's do it again. Let's just limit in at that price again. You have post only on. If you have post only on, guys, it means that that trade, when this actually gets executed, you're actually going to get a market maker rebate. You're actually going to get rewarded for creating liquidity on the exchange. So what you're doing is you're creating the market, you're a market maker, and in turn you get rewarded for that. The other side of the coin is this. Reduce only is slightly different. So if you have an order, so guys, I just quickly set this up. So basically, reduce only means this. When you have an order in the book already, so I have a long from this price here, around $34,000. Reduce only means you can use it. So when the price actually rises and hits this, it's basically a take profit in a way. But the only thing this order can do is reduce your already open position size. So say I drag this below here and I click confirm. Basically, that means that the price got hit and it actually just reduces your size. So reduce only means you can only reduce your position sizes. Post on only means that when you actually have a limit order in the book, you actually get rewarded for it. So legends, I hope that was helpful for understanding post only and reduce only. You won't actually see reduce only on the USDT perpetuals, you see it on the inverse perpetuals, but they're basically the same, guys. And what I'm going to do now is just do like an overview of everything and go through a few more things to wrap this up. Quickly mention, guys, so you got limit orders, market orders, conditional orders. You can use all of these. There's a slight difference between the USDT perpetual swaps and the inverse perpetual swaps in the fact of how you're going to actually tally up the amount of Bitcoin you want to buy. With the USDT perpetual swaps, you're going to be putting in the amount of Bitcoin you want to buy. So, just type in 1 Bitcoin here. But with the inverse perpetual swaps, you're actually going to be putting in the amount of dollars of Bitcoin you want to buy. So say you want to buy $100,000 worth of Bitcoin at $30,000. So when Bitcoin goes to 30K, you want to buy $100,000. You actually put in the amount of dollars you want on the inverse perpetual swap side. So that's kind of the main thing there, guys. Generally speaking, comment below as well if I've missed anything, and I'll reply to your comments in terms of what you want to know how to do and fix, or what you got a problem with. Bybit also do allow you to do staking. You can get rewards, APYs, you can get yield farming. I'll let you guys come and check this all out, but within Bybit, you can actually get like a flexible staking terms. So you can actually just put Bitcoin you're not really using or cryptos you're not really using and get pretty massive yields on this. All the timestamps will be below, guys. Check them all out. If you got any questions, ask them in the comments below, because I will actually answer them. I'll go and comment and try and answer your questions. And yeah, guys, also, if you want to get an account, get the bonuses below with the links. Bybit literally give me links which give you thousands of dollars for free when you sign up. So check it out, guys. And I will see you on the flip side. Hopefully that was a good explanation. Generally, get you guys started. Have a good day. Cheers. Bye.